Okay, Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi ta'ala wabarakatuh. And very good morning to the speaker and all participants. We start our program today with Kitab Al-Fatiha.
Auzubillahi minasyaitonir rajim. Bismillahirrahmanirrahim. Alhamdulillahirabbil alamin. Ar-Rahman. Iyyaka na'budu wa iyyaka nasta'in. Ihdinas siratal ladzina an'amta 'alaihim. Amin.
Our honorable speaker, Brother Razali Ahmad from Kuntum Consultations, and all participants. Attention to all the participants. Please ensure that your audio Zoom applications is on a silent mode. And for the information, the attendance link will be provided 30 minutes after the talk, and the feedback form link will be provided before 5 minutes the program ends. All the participants need to fill up their attendance and feedback form to get the CTD points. And without further ado, I would like to invite Brother Razali Ahmad to give his talk entitled Operational Risk Management. Please welcome.
Okay, Alhamdulillah. Thank you, Brother Muhammad Khairuddin Aziz. I've been in communication with him, and Alhamdulillah, I would like to thank him for being able to connect me with Sultan Ahmad Shah Medical Center under the International Islamic University of Malaysia for this hopefully a beneficial talk on operational risk management. Okay, I will be conducting my talk in English, but then we from time to time we may want to change it in a way in Bahasa Malaysia nowadays. After all, I think English without further elaboration is very important. International being also this very prestigious university, international standard English is very important. So I'm very honored and also very happy that International Islamic University of Malaysia using English as a medium in this connection. Okay, all right. This talk today is under operational risk management, and it is expected to end within 2 hours. If we have the time, we will go slightly further, but then I try to make it within the timeline of 2 hours. Okay. Okay. Little bit about myself. I'm holding this master's in Islamic Banking and Finance from Global University of Islamic Finance in SEF, and I'm also a member of Chartered Institute of Islamic Finance Professionals (CIF), and also I'm a trained HRDF trainer under the Ministry of Human Resource of Malaysia, and I've been in the banking sector for almost 30 years, 29 years plus. I left the banking sector in 2012, and after serving 29 years plus, and after that I've been in this line, training and sharing of knowledge in Malaysia and overseas. But during this pandemic season, my limit to share my face-to-face is being affected. But then Alhamdulillah, we have this webinar session from time to time, also conducting this through MOHE, this Ministry of Higher Education, then also now with this IIUM, and also is more inshallah to come. And I'm also a corporate trainer for this international consulting and training firm under BTS, based in Dubai. and also I've been under Mara panel of trainers since 2017, and have been teaching the subjects of entrepreneurship. And so I'm another trademark of my knowledge is pengurusan kewangan pribadi, personal financial management. This is very important. I consider it this is one of my best topic I would like to share, which I have been sharing with armed forces. I've been sharing with the university, the lecturers from UKM, University Malaya, and also Mara, and also a few others like Majlis Agama Islam. We can name this and many more from especially from the armed forces sides, the Army, the Navy, and this Air Force. Then I'm also a part-time tutor, this lecturers for Open University Malaysia until now, since 2014. For a short while, I was actually also teaching in USIM. Then in the banking, I've been, I should say, I'm blessed with this opportunity to serve in many departments, including the branch managers. That's why when I decided to turn into sharing of knowledge, training, teaching, because I want to share my knowledge to the younger people, especially those new entrants, those belia, our youth, for that, so that they will get in a way what knowledge have been acquired with them, especially on the financial management. And also, I'm also teaching other subject like this big data, on this financial accounting for non-accountant, because I'm not accountant, but for non-accountant, basic accounting, entrepreneurship is beside that, on the marketing side, and also a few others. We can in fact, I'm looking forward not only this session with IUM, maybe on in times to come, inshallah, to share other knowledge. And I've been with banks, 3 major banks, the Afin Bank, my last employer. Then before that, I was with RHB. Then before that, I was AM Bank. And also I was with another international company, is under insurance, MMS Miller, insurance brokers. So all in all, I have about 38 years of experience teaching and banking to share with, inshallah. Okay, now we come to the topic, operational risk management. What is operational risk management? Basically, it's a risk of loss resulting from ineffective or failed internal process. This is about risks are lots. We have the market risk. We have this credit risk. We have this liquidity risk. If we are talking about financial, we have this operational risk. What we are doing now, because I'm thinking IIUM, it is not so much about dealing with financial, but it's more about operations. That's why I would like to share this knowledge, specifically on this operational risk. We have the legal and regulatory risk, business risk. That was also a part of this our topic today. At the end of the day, we are doing business. Okay, I am doing business. Okay, so without business, there's no actually risk. Okay, how much you take the risk, the level of risk, our risk appetite, that portray our business. Okay, some like banks, they have to take calculated risk, but they have to take risk. They have to do business, because without risk taking, no business, no gain, no risk. Okay, you want to gain, you have to face the risk. Okay, so we have the strategic risk, reputation risk, risk of return, and of course, if in the Islam Sharia risk, This is another one that they're talking about. To explore the objective of this program, I would like to share with you to explore the available methods of managing the risk in a global views, as well as in specific to IAUM. Okay, in global views, yeah, I'm taking more on the model of banks, because a bank is their risk management, we should say, consider as one of the, not to say the best, but it is things like nothing is best in risk, because if you cannot say you are safe from risk. You cannot say that I'm safe. My risk management program is very strong. No. Okay, risk is always there. You do business, there's a risk. Okay, it's how you manage it. So also another objective is, more importantly, to suggest various consideration and application towards the identification, assessment, control, and managing, and also reporting of key issues on our topics today. Okay, this is our modules. We try to follow the timeline. We have 3 modules: introduction and overview. What is the significance of operational risk? We take about 45 minutes, and that is operational risk management program, addressing operational risk, and measuring and modeling operational risk. Then after that, we come to the module 2, basic concepts. What is loss event? Okay? When we face with this the action, the repercussion of events happening, that's a loss. There's a loss event. Risk factors, loss types and event against factor of controllability, dependencies between risk factors and events, and also attribution of loss. This is under module 3. Then under module 2, sorry, under the last module between the before we end is the crisis management. I'm putting this part of this risk mitigation. Agency notification and mobilization, training to prepare, crisis, and business continuity plan. What is this all about? And if we have the time, because Cik Hai has already sharing with me some templates from this IAUM, I will try to go through that and give some ideas about that. I think IAUM has, based on what I see, has already in place their risk management program. Alhamdulillah. Okay, what is this? Who want to change? Okay, very people want to change, but who want change? Many, but who want to change? People may just difficult. Okay, it's not easy to move from one place to one place. You always feel comfortable at your situation, your position now. But it is without change, people won't progress. Okay, so we must be able to move. Kalau dalam Islam dia panggil hijrah. Okay, kalau kita berhijrah, berani kita tak berhijrah. Kalau kita tak berhijrah, kita tak ke mana. So risk management is another thing. So you have to move from one to a better one. Okay, okay. Under module 1, as I mentioned earlier, significance of operational risk, then operational risk management programs, addressing operational risk, measuring and modeling operational risk. Over the last 2 decades, the methodology of evaluating internal controls, this is about internal controls, and risk has become more and more standardized. The standardization has been in response to government regulators. Government are very particular about this. This is coming under various regulation, because especially the companies that are under public interest, such as IAUM, you are having a stakeholders, including those government, public, things like that. So you must have all those in place. The standardization has been in response to government regulators, credit rating agencies. Perhaps IUM not under that yet, but I think being international association, organization, establishment, it is a matter of time. You'll be maybe needs for these rating agencies when you go for this public stock exchanges and institutional investor groups demanding greater levels of insight and assurance over risk and effectiveness of control in place to mitigate them. Okay. Walter Wriston, who is he? He said the fact is that bankers, as I said, today's are more on the banking, but put IUM as part of this banking, so that you are under the same mission to make profit for public stakeholders. So you are doing business of managing risk. Simple, that is the business of banking. Or this, if you are in IUM, the business of teaching, business of teaching, at the same time knowledge sharing, at the same time health, especially this Sultan Ahmad Shah Medical Center. I'm sure you are dealing with life. Okay? Then this is very important. Life means it is also about business. If one life safe is money safe. One life you manage it, people may take legal action against that. That is also another loss of business. So Walter, his full name is Walter Bigelow Wriston, was a banker and former chairman and CEO of Citicorp. I'm quoting his statement because he was regarded as a single most influential banker of his time. Okay, it is from 1967 to 1984. That time, banking corporation, all these are very strong. But over time, as you see now, with this, especially with this pandemic, COVID-19, I think situation will be different. Okay, banks, business entities will be challenged with various management these challenges, management, how to survive. That does not this is not exceptional to this IUM also. Okay, so how we manage risk while doing business. Okay, this is what Walter Wriston was saying. Okay, what about healthcare center? Healthcare, business of healthcare. IUM is in the business of healthcare, at the same time in the business of education. Okay, as I said, are you in exception to that? No. Okay, you are part of this also business of making good and reasonable returns to these stakeholders. All right. Okay, risk is, as mentioned again, is present in every aspect of human life. Okay, as we move, as we stay, we stand, as we were born, risk already start. Okay, but in the context of conducting all kind of activities and especially business activities, it deserves special attention. Okay? And risk can also be described as a potential event that will prevent an organization from achieving its objective. This is from the Australia New Zealand Risk Management Standard 2004. I think IUM you adopt also this standard based on what I see at these templates. Correct, Kaya? Yes. Then this is a potential event, okay, that prevent. Potential meaning it can happen. It will happen. It will happen one day, small or big, okay. And when it's happened, it prevent organization like IUM to achieve their objectives. Yeah? Okay, primarily have three types of risk. We have this market risk, credit, and operational. As I mentioned, we have just now we have about 10 risks, but we have this big risk, market risk, credit, and operational. So today, I'm more on this operational risk. Yeah? Then anything apart from credit risk and market risk is operational. Okay, it's not because operational is very big. Yeah, you do everything, you operate everything is operational risk. Even you do business, in the business, there's a risk inside. You're doing business because it covers people, cover system, cover this other external factors. Yeah, the regulation, all this. So operations is about management. You manage, and it's about people. Every day we are dealing with the management. We are about people. We are about projects, system. Okay, computer now. We face the risk. Let's say we are doing this webinar. We face the risk of system collapse. What are our backup? Okay, what is our? Is there any backup? Okay, if we don't have any backup, then we may just end up, okay, class finished, we have to do another day session, but it's not. Okay, if we have a strong system, we may have backup system. Like bank, we have this, we used to have very big problem at one time, this in 1992, I remember I was a branch manager in one of these branches in Kelantan. So we have a very big outage by this tenaga. So system, every bank collapsed. Okay, we talk about local. We also have international problem with this. So when we have system collapse, what happened? People cannot withdraw money. Banking is important. So if happen to this, kalau this IUM katakan system problem, how you want to conduct operations, how to conduct surgery, things like that. So there must be a management of this risk. Then processes, process part of this risk management, and procedures. We are dealing with process and procedures, and also at the same time we do your client facing. You cannot. People here can be internal, especially internal people here. But when we talk about people, clients here, external. Okay, we can also have internal clients. People say we have two clients, two type client: internal client and external client. These are all people. But here, when we talk about IUM, especially Sultan Ahmad Shah Medical Center here, we're talking about health, about life. So this is client service. As mentioned earlier, what happens if you manage one life? So it's very important. Therefore, it's reasonable to consider it to be at the very least a very significant part of operational risk. Okay, this is part of this the big picture. People, the system, the process, procedures. These are part of this operational. Okay, example operational risk. This including catastrophic, this external events, hurricanes. Kita pun dah tahu sekarang ni with the global warming. You read this newspaper ataupun you now people hardly read newspapers lah online. You see this what happened in America. It's never happened in New York. Banjir recently in the part of this east coast there. Okay, kalau di Malaysia kita banyak happening this floods in East Coast, states like Pahang, Terengganu, Kelantan, perhaps maybe part of Johor, also other parts. But these are catastrophic events beyond our control. Yeah? This is partly to be managed. Yeah? Then we live with computer hacking. People may just hack our computer. Okay, 90% of our tools in doing business using computer, and internal and external frauds. These are example of these internal people corroborating with another staff or another external party, okay, to fraud. Okay, this happen even in the banks. Okay, big banks like Barings, Daiwa, Sumitomo, Enron collapse because why? Internal external fraud. We cannot trust, but then you cannot say I don't trust my staff. The management, it's not about that. It's about you must have some professional what do you call it, skepticism. You must be skeptical about people in doing business. So this is the internal control part. Okay, check. Okay, checking everything, follow. But you know, everybody is not having this dreaming yang sama. Tidak semua manusia mempunyai nilai yang sama, this mimpi yang sama. So kita tak boleh percaya. So that is part of this human behavior. Okay. Then also the failure to adhere to internal policies. Okay. Some people just like to take shortcut, work around. Yeah. So this can happen. Okay. Okay. As mentioned just now, some scandals at banks. There's Barclays banks. This involve people. Okay. The top executive. It's not by the people below. It's not by people, maybe the front lines. But it can happen. But here we take exception here because I'm taking example here in banks. Banks supposed to be very, very strong, very prudent because you're dealing with money, public money. Okay, still happen. What else if this organization like this not so taking money? Okay, I think IUM not taking deposits so much, okay, except on certain issue like it's like doing operation atau surgery takes small part of deposit. But in banks, they're talking about savings, we're talking about investment, and it's happened by the top executive. I'm talking about this top executives, is not the middle or this top, the CEO, yeah, the number 2, number 3, okay. So and also Hong Kong and Shanghai Bank, HSBC, okay, in banks they work around with this laundering, money laundering, yeah, to work with terrorists, to work with drug trafficking, okay, because they are the one supposed to be custodian, public custodian, pemegang amanah, tapi happen banks, okay. So we cannot trust, okay, even big organization banks, okay. This I'm saying this is happen in bank, it can happen anywhere. It happen with this. We cannot exclude, like that's why I said government is anything happen, state governments, agencies, yeah? And also this the other one is JP Morgan Chase. Okay? This is, they call it London Whale. This another very popular. Because they use this rate exchange, the LIBOR, London interbank banking offer rate, lending. Because in bank lend to bank also. Bank will not only lend to customers, dia bukan bagi pinjaman kepada customers. Bank boleh lend kepada bank lain. Bank A boleh bagi bank B. Bank interbank borrowing, all this. So in big banks like this, the people inside there, they use the rates exchange rate, they can cheat the bank. Okay, this is what happened, what has happened, and this bank collapse. Okay, now we go on the significance of operational risk. Okay? Operational risk is risk of financial loss. As I mentioned, due to external event or due to inadequate or failed internal process people. This system including legal. This may include legal because people may sue us back. May sue you for your failures. But when they sue, it's not about well, of course, your reputational risk is at stake, but they sue for the loss, okay, loss of life, loss of maybe permanent damage. Okay? So this then essentially operational loss may be a financial loss in the course of business, aside from market, credit, and liquidity. It's about when we talk about liquidity banks. Bank may collapse when they have a liquidity risk. If there is a mismatch between the money they take and also money they lend, okay, there's a mismatch. There's a bank taking risk management very serious because bank may just collapse if there is a liquidity problem. That's why I talk a bit on this policy kerajaan kita this masa pandemic sekarang COVID-19. Why banks unable to give rates, cut rates, certain rates because bank may mismatch because bank give example dah promise they already promise you customers letak saving simpanan say at 4%. So now these customers lock the money katakan 2 tahun, 3 tahun. Ada yang big like government government put a lot of money in banks, state governments, GLCs they put. So now they promise at 4%. Bank must pay them 4%. But now when bank lend money in the form of housing loan, car loan, things like that, so they promise, so they say, okay, I promise at 5%. Okay, because this margin of 1% between 4 and 5, tadi ada margin 1%. This margin money must be used to pay your deposits for the customers' salary. So if banks stop collecting or reducing the interest rate, is a collapse to the bank. Okay, that's why Bank Negara is not so much reluctant to reduce because the catastrophic effect will be very big. Because if banks start liquidity problem, if one small news say Bank A cannot pay, people cannot withdraw from ATM because no money, everybody will line up because they say, I have my money, I'm scared the bank cannot pay money. So it create very big issue. So bank must always liquid, must always have money. So because bank is part of the payment system in the country, where this I will talk this more if I have another topic, actually banking system or financial system. These are very interesting topics, but I just sharing a bit here. So why banks need to be strong? That's why I said banks strong because of this to avoid liquidity problem, because liquidity problem means the country can collapse. Because if one bank run, another bank run, people start beratur di ATM, di bank counter, panic. Rakyat panik lah. Bila rakyat panik semua nak keluarkan duit, yes, kerajaan ada duit, bank ada duit, tapi tak cukup nak menanggung. Maybe tak cukup hari tu, kena print lagi, then it may create chaos. Bila create chaos, akan menjadikan huru-hara. So that's why bank always want to stay strong, look very strong, because their risk management is to ensure that confidence is there. Okay, all right. Any significant change in risk management has to be fully taken into account the vital role of the people in the organization. Okay, the people is another factors to make sure operational risk management is always intact. Always remember, the boss always look at the staff. This happened. One case in a bank, the staff buy this Ferrari, everything new. Suddenly, he appeared in TV. His success story. But the boss see, how come my staff having Ferrari, having so big cars, many cars, where he got money? Okay, banks tak banyak duit. Bank tak banyak salary lah, maksud dia staff dia. Tapi some people say staff bank banyak gaji tinggi, tapi okay, tapi still tak boleh nak beli Ferrari kalau dia middle management, melainkan dia menang loteri. Ataupun dia ada dapat income yang lain. Tapi this was happening sometime back. So boss tengok, the boss very very particular, sharp. Dia tengok how come keluar dalam TV. So he check, later check, found out actually he's cheating. He's using his work in the IT system. In the IT department, he manipulate small balance, okay, customers bank balance. Kalau katakan RM36, 20 sen, dia ambil 20 sen tu. 20 sen tu dia put one side, masukkan account dia. Kalau 3 million customers, 20 sen, we just million. How much? So that's why bank must also, top management must also look at what your staff is using, is buying things. So this is another telltale sign, tanda-tanda awal ataupun tanda-tanda dah terlewat. Tapi big man, not only top management boleh buat corroborating ataupun bersekongkol dikata dengan orang luar ataupun orang bawah dia untuk menipu organisasi dia, yang di bawah pun boleh juga di bawah. So that's why people, okay, this part of the factors. Okay, risk management framework has 3 stages. Okay, risk, first you identify. Okay, this is very important. What are the risks here? Then you characterize it. Once you identify, you characterize it, and then you manage it. This identify, cari. You must have cracked it. Cari. There must be a committee to identify what are the risks. Because I was in the bank. I was part of the team. We make operational risk as our championing, the operational risk. Every day we sit, talk, what are the risks? What are the risks? What are the probability of risk? Kadang we read, tengok sana, then morning kita meeting. Early morning kita meeting, identify, discuss, then characterize it. So then manage it. Okay, this operational risk begins with identifying with what can go wrong. That's what I mean. As a best practice, a control framework should be used or developed to ensure completeness. When you identify, you must start from A to Z. You cannot just halfway. There must be a dedicated personnel, dedicated department. You cannot just taken care by just another person who is doing other work. Because he may just forget about it. He just take it as this is my part-time job, and my main task is other job. So it must be complete. So, and under risk assessment here, when you assess the risk, you can have what are the worst case scenario, the likely impact and the size. Okay, let's say example, people want to cheat Okay, let's say system, work around system. Okay, the people. What is the impact? From small until big. Okay, the worst case scenario here. Okay, okay. Once the step assess the nature and importance of different risks and their collective impact of the organization, and their collective. Always risks have impact on the organization, not only the department. It is the global. Global, I mean the big picture of the organization. Okay, so you cannot just say, you just cannot say just put under the table. You say this is small matter. You just forget it. Okay, it won't like that. Okay, risk identification, risk characterization, risk management. Measurement and mitigation. The risks are measured against the consistent scale to allow the risk to be prioritized and ranked comparative to one another. It must be some priority. You cannot just same. All risks have different priority. And the measurement also considers the cost of controlling the risk related to the potential exposure. Okay, in doing business, cost is also important. What are the cost effective? Okay, these are all to be considered. You cannot just think about risk, but you forget about doing business. So it must be balanced. Okay, monitoring and reporting risks. It is ongoing. Assessment. It cannot be, as I said just now, we've seen it. I was sitting in the bank every day. We have meeting early morning, talk about this device thing, and assess to determine any changes over time. Okay, and your system must be relevant over time. You cannot just say 2 years ago the system still applicable now. It is ongoing. Always have a must update it. Okay, people are getting smarter. The hackers are getting smarter now. Okay, otherwise they always get caught. That's why this because they are smart, the cheat really smart, they can cheat because the risk management people in the organization is outdated. So that's why they can cheat. So if you can discover, then okay, you are ahead of them. Okay, this cheat. The risk and any changes are reported to senior management. This is one thing. Don't keep and to yourself. As I said, there must be a dedicated department. Work on it, report, itemize it, agenda it, minute it, and regularly they conduct meeting. Report to also to the board. And also there must be a decision made. Okay, you cannot just doing just for the sake of doing. It must be complete. I said earlier, must start from A to Z until the board and decision passed down back. Okay, this is the process here. Okay, as I said just now, this process, people, system, external, and the people can include here employees, customers, your vendors, and also other stakeholders. Employee risk includes human error and wrongdoings, fraud, and risk include breach of policy, insufficient guidelines. Sometimes you don't train staff well, or sometimes your guideline is not good, it's not up to date, outdated, and poor training, and bad decision making. Sometimes everything good, but the decision is bad. Okay, we have many bad decisions, but we learn from bad decision to make. But more often, but you must be able to decide, make decision. Mistake is okay, but come back better. Okay. As I said just now, fraudulent behavior of the staff must be seen. Always critical about it. outside the organization, there are several operational risks that include people also. Okay. Monitoring and controlling the people aspect operation is one of the broadest area of governance. You monitor and controlling people. Okay, this is part of this operational risk. Okay. The risk categories can be defined further to include the legal, mentioned just now, which is loss resulting from failure to comply with laws, and as well prudent ethical standards and contractual obligation. Okay, I think IUM is always under contracts with your any parties in any customers, vendors just now, I mentioned. Then the exposure to litigation is one risk here. Mistake in medical prescription, surgery. I think many more here. What I can think of about it. Okay, this is the diagram. As mentioned just now, risk taking. When you take position, when you start, when the stakeholders decide to do business, we want to form International Islamic State of Malaysia. Okay, the stakeholders, they are taking position. Okay, risk already start. Okay, then when decide to form Sultan Ahmad Shah Medical Center, okay, the risk start already. Then what are the impact on this organization? Okay, okay. Now the option, there must three options. You either you avoid risk, you prevent risk. Risk avoidance here, you don't you don't accept risk. You don't do business. In other words, you don't do that. Okay, let's say you take position. Example, this the university decide to open medical school. So, this risk. So we don't want to open. No need. Some maybe stakeholders say management say, because we don't want to avoid risk, so do form. But you decide. You cannot say I cannot avoid risk because we want to do business, we want to have a certain obligation, certain priority. So we have to start. So this is not risk avoidance here. Okay, by avoid, it doesn't solve problem. Okay, your business is not growing. Okay, so the other one is risk prevent. Okay, this is what we are talking about. Yeah, prevent. You reduce it, you minimize it, you mitigate it. Okay, this is we are under here. There's a risk. Okay, you prevent or you reduce. Or the other one, risk transfer is also part of we are doing here. The business. You transfer. Example, insurance. Take pass to third party. If there is a claim, okay, the insurance will pay us. There's a, let's say, flood. So this is another this risk management option. Okay, understanding the source of risk will help determine who manage operational risk. Okay, operational risk management both address risk in the same area but from different perspective in an effort to consolidate this discipline. Some organization also they form this integrated risk management. This is between enterprise risk management and operational risk management, but they are all the same. Enterprise means when you do business at a high risk. So this, but when you have both, you take it as a integrated risk management or IRM. This process proactively manage operational risk at a reasonable cost to minimize actual or potential loss arising from operational risk failures, and this include inadequately defined procedures or policy system failures, internal control flaws or breaches, insufficient skill stuff, as I mentioned earlier. And the organization can implement technology with different parameters. And also here, we are talking about improving the methodology here. Okay, we have a lot of system outside there. Okay, you can. Some people they can outsource it or they share with outside parties to implement technology, the state of the art, the latest technology. Okay, either you form your own with small skeletal stuff, work around with the outside, outsource side, or your own. Okay. Operational risk. This another one conducted globally by this KPMG by Indian banks. They say 70% of the bank had no specifically budgeted funds meeting operational loss. Okay, this is banks. What happened to other organizations? Also same. A lot of people, the management top management think about it's not so important. Okay, you see here the study conducted. 75% of the bank had no specifically budgeted. They're not budgeted so much. Yeah, there's maybe some budgets. Okay, but not enough. Some people say because it wait to happen. Once it happen, then we allocate budget for next year. Okay, so it's happened in banks, in Indian banks. The study by KPMG, this is one of the big accountancy firms, consultancy firms, and 75%. I think it's Malaysian banks has overcome all this. They spend a lot of money on this. That's why we see our banks quite strong. Okay. The survey also revealed that the banks have made some progress in credit and market risk management, but the same level of preparedness was not evident in the operational risk. Okay? They spend more time on credit, on the market, but not on operational. Okay, they say operational ni very, very minor. Okay, but when it's happened, it's the biggest chunk of the capital is taken away. So the management must decide which priority to take. Okay, consequently, there has to be a change in management approach to systematically manage risk and at the same time increase the motivation of staff. Risk management is quite boring because nothing happened. Because it's not happened, no work. People say, "Wow, you do every day came same thing," but yeah, sometimes it is like api dalam sekam. Tahu maksud dalam bahasa Malaysia tu, dia meresap dalam, tak nampak. Okay, pelan-pelan meresap, bang, terbakar. So this is that's why the motivation of staff, let's say in the department, or at the same time, sometimes people tend to cheat when they are not motivated. Okay, if they just decide to go against the company, okay, they just cheat, they just do something bad to the company. So this is also the motivation of staff. So that's why when the staff is highly motivated, well trained, things always nice. To ensure success, they have to be well trained and given learning and knowledge, need to carry their task. And also the staff must be able, the freedom to manage risk effectively. This when you form risk management department, the staff must be given the priority. Of course, well trained. They must see the bigger picture first. What are their parameters of responsibility? But they must be creative enough. Okay, because cheats, the cheaters, the fraudsters, they are very creative. Okay, so that's why they say it needs a thief to catch a thief. So the staff must also like a thief. we're talking about that, so that they're very creative. Okay, this is another challenge to the management. Okay, companies that do not sufficiently integrate sustainability and strategic and operational risk management may find themselves losing ground in increasing competitive global marketplace. Okay, if you are not in the competition in your risk management, operational risk management, especially, there's a time bomb. Always it will happen. Okay, not today, tomorrow. But it's tend to happen, because the moment one staff demotivate, or the moment somebody is they see some weakness in your system, your policies, all this, the vendors, because you're dealing with everybody. Okay, for example, key event, the operational resilience timeline. This is in 2007, 2014. This happened in breakdown in England. The system supporting the UK financial service sector, just imagine, is not working for 6 days. Okay, at 6 hours. I mean, not 6 hours. Banking always work timeline and also on real time. Okay, it is always one transaction happen on the dot, updated. Just imagine if you cannot do anything banking transaction for say 6 to 9 hours. It's happened. Like I said during 1992, when we have power outage, banking system collapsed. So the bank decided to have that's why the generator set. Before that, bank don't have generator set to work around all this utility interrupted power supply. There's a facility where when lightning strike, so you don't collapse the system because there's a uninterrupted power supply system. So all these things happen. There's a backup. So if the bank stop even 1 hour, it means a lot to the confidence of the public. Okay, the event highlights concerns around the resilience and system and process that deliver a product activity whose withdrawal could have a material impact on the economy. Okay, as I mentioned earlier, economy. Okay, banks, hospital also, university also. Okay, because one organization, let's say example, Sultan Ahmad Shah Medical Center, this is impact the economy. Okay, because not only the local economy, the state economy, the national economies, because the stakeholders are various. Some critical economic function in the healthcare sector are this one is payments. You deal with payments, collections, clearings, supply chains of drugs, medications, and also increasing errors. Errors here means sometimes keep on repeating errors. Custody services, the availability of that, increasing cost for life insurance. When you outsource it, you pass it to another party, now cost is increasing. And also malpractice, lawsuits is happening. These are the probability of risk. And taking a holistic overview of the service and putting them alongside with the end-to-end process enables the analysis of risk in real cyber attacks. Okay, this is another case which is very rampant now. Cyber attacks. People can do many things. Okay, we still remember kalau the current situation now. I'm talking about the recent scenario. We supposed to win the gold Olympic under para Olympic, one of the goals. So we lose. So what our cyber, they use cyber troopers, but it is this word, they go against another country. go and attack until the system collapse, because they put something like protest. Okay, so this happened. People also can do to us. Okay, many things can happen. So these are things that it works both ways. We can do to other people, people can do to us. Yeah, and beside that, political turmoil. So flood, we already, I think we are very familiar about floods here. Political turmoils also can happen. Okay, our country without section, not only our country, other countries. So because the politics are dynamics. Okay, so this can happen. Okay, so it can brings down economy. So that's why alhamdulillah our country takes good step. The Duli Yang Maha Mulia Yang Di-Tuan Agong take very positive step to address quickly, okay, this political turmoils that we are facing now, because it is another risk, okay, that affect the well-being and economics of the country. Okay, potential impact of such scenarios can be addressed and mitigated proactively with an informed conversation. Okay, must be informed between risk function and key stakeholders. Risk information must be spread. You cannot just keep it. It's not like audit findings. So audit findings, in a way, is sometimes very sacred. We need communication between certain parties, because risk part of internal controls, audit, risk, so risk management. But risk works outwardly. Okay. You must tell people these are risk, this thing. Always inform people, motivate people. Talk, don't do this. This is coming from top down, and the info from down up. Yeah. So these are the how we address operational risk issues. Okay. Most losses are not isolated incident. Okay. As you know, it's not just one-off. Normally, regularly, losses, things like that. Why losses? Okay, there must be reason why losses. You cannot just lose suddenly. You make profit, sudden loss. Must check. Okay, why loss? Okay, when you do some profit, or you regularly make loss. Okay, there must be a reason. Okay, because it's not isolated. The risk management people must be critical about it. What are the policy being breached that make you lost? Okay, okay, maybe involve the people. Okay, okay. Noticing the high-profile event, the financial service sector, in this case, is not also financial. It's also applied to this IUM of the commercial significance of operational risk management, and dedicates significant resources to it. This is the study by Brian and Grimwade. This. Okay. The financial officer is increasingly aware of the commercial significant operational. That means don't look at operational risk as something minor, something not commercial. Okay, because the effect is very significant. The consequences. Okay, this another not so good to the top management. Directors and managers increasingly face personal liabilities. Young and Blackers study. So normally this is people swing back. They say something happened to an organization. Okay, they don't go to the staff. They go to the managers. They go to the directors. So at the end of the day, the directors and managers are responsible. Okay, and go. And they face under personal liabilities. Okay, not only the corporate liabilities under the company, up to that extent, to their personal liabilities. Okay, we come to measuring and modeling operational risk. All business entities have a responsibility, not only to their board of directors and management, but more importantly to their employees. Yeah. Shareholders and taxpayers to manage their operational risk. Okay, involve everybody. Okay, not only to upward, but downward, and also to taxpayers. So it involves, because it's cost. And awareness and dedication of resources to operational risk management can lead to significant benefit of such institution. When you are aware, you dedicate your resources to operational risk, the effect is significant. That's what it means. Okay, among the expected benefits, these are the study by this Risk Management Association. This is a comparative study. Leading financial institution, they do it. When you impose strong operational risk management, your performance improves. 83% of that 75, they show improvement. Then reducing operational loss, you're able to reduce loss. 73%. Increasing accountability and improving governance, 70%. Protecting against loss of reputation, 66. It's big figure here. Meetings. This is a subordinate of Lee is under bank. This is American one. Optimizing the allocation of capital. Capital is very important. And if you manage your operational risk, you're able to optimize your capital. And combating the threat of business disruption. Definitely, business disruption can be combated. The threat of to failure. Okay. It is possible for man to learn what he thinks he already knows. If you know, we think that we know, it's not impossible for us to learn. Okay. Now we come to, I'm rushing here. Time is because 2 hours here. Okay. You want to take break and no break, we continue with our modules too. This is another one. This is run through also basic concepts. Loss event, the basic concepts, risk factors, loss types and event factors, controllability, dependencies between risk factors, events, distribution of loss. This is on not quantitative basis, qualitative basis. We can do on quantitative basis, maybe in other times. Okay, what is a loss event? Okay, internal losses arises from actual events. When actual happen, there's a loss. Okay, the materialization of the operational risk and reflect the organization's own experience, your own experience, and the circumstances that produce the losses from a single cause. Okay, loss event from a single cause. Okay, loss can be by many, but one single cause can affect the performance of the organization. A specific situation is the disruption of business activity. Often is a result of loss event. When there's a loss, you disrupt your business activity. Okay, but then you can always say that loss I can cover back. The bank, this organization can cover the loss. Okay, you have buffer, but it disrupt your business in terms of maybe the profit of the organization. Therefore, internal loss event have the potential to be the most relevant basis of analysis and management response. When there's a loss, always decide when there's a loss event. Even in bank, we work as every cent count, every cent amount. In other words, if we lost 1 cent, still count. Okay, so I think it is also to be adopted in any organization because it's our taxpayers' money. Every cent loss must be evaluated. Why there's a loss here? Okay. The regular activity of company may be disrupted as a result of impact of various factors. This is the cause of the loss event. Financial stability of company is one of essential factors which determine the viability of necessary corporate capital. Capital funds. Mean if you lost event, it affect your capital. Okay, even small. Okay, when you do business, capital outlay is important. Okay, sometimes you're not making profit. At the end of the day, it eat up your capital. Okay, sooner or later, you may decide, oh, we have to stop business. Okay? So this is loss event. Loss event may lead to disruption in particular areas of company activities, causing financial stability. Let's say certain department, let's say in the surgery department or certain account department. Because okay, I'm not sure in IUM, but certain organization, they have every department is a profit center. Okay, the applicability of that. Some they say, okay, it's a loss center. Okay, but another department is making profit to cover the loss of that department. Okay, so but there must be a accountability. Every department must account for its activity. Okay, restoration of the company activity to the financial state. In other words, when there's a loss event, you must be able to come back to this prior to the event. In other words, how quickly you can come back. Okay, sometimes it involves a lot of capitals. Okay, you require capital injection, which should lead to improvement of company condition and restoration of financial stability. In other words, when you lost, it's a moment that let's say IUM, we have understood ada 3 cabang, Gombak, this KL, and in this Pahang. So maybe one of your centers is being affected with this, let's say, floods. So there needs a capital injection by the parent company. So that affect financial stability. So if you manage the risk, this thing won't happen, or at least you can minimize it. Okay. Unfortunately, as a result of loss event, parameters illustrating financial stability in basic areas such as financial liquidity, asset management, efficiency, profit, debt management. This is more on the bank. Or this debt management also happen to any organization. Your solvency. If you are always in loss, you are always in debt. You are under solvency. Okay, you cannot operate on your own. You need to borrow. You need to be helped. The state government have to cover you from time to time, every time. So, and probability are disturbed, which may limit or even withhold the ability of external capital. By adopting an active attitude, applying transfer of risk. Okay, sometimes you can, as I mentioned earlier, you transfer it to an insurance institution, but not all can be insurance can be acceptable by them. Okay, certain things they cannot accept, or sometimes they impose high cost. We call it loading. You have to pay extra money. Or sometimes they don't go at all. They say they have to see the history of your loss, your performance. If you're always making a loss, your debt particular department, the insurance will not be able to take at the market rate the premium. They charge extra because why? You cannot improve your performance. Your operational risk is weak. So they charge, or they just can say deny. I don't want to take. I don't want to cover. But certain time they say, oh, they may call another insurance company, work together. Okay, let's share the risk. That can happen also, where the cost is high. Because the insurance company say, I cannot afford to take this particular risk. I have to call another friend, another competitors from insurance company A, B, C, work together, cover your risk. So that also can. This happen. for capital because it may use compensation or reserve to cover loss. This, if there is an event of claim, this can be used. Excuse me. Okay, excuse me. Under B, risk factors, loss types and event against factor controllability. In 2008, the USA experienced one of the biggest financial crises since the Great Depression. This is the call it the subprime. Factors driving risk in the US banking industry, the role of capital franchise. Franchise value and lobbying. Here we are talking about comparison between relationship of bank with political, because we are talking about sometimes there's a need of political support, and also not only political, sometimes state support, and your bank risk, your actual managing the risk. Sometimes people say, okay, I have a strong support. I don't think about risk so much because I have a very strong political support. Okay, I have strong government support. Okay, you don't work. So this is a study conducted here. Factors driving risk in the US banking industry, the role of capital, franchise, and value and lobbying. This is conducted by Katina Gregory. The finding is this. The findings provide evidence that capital to asset ratio, CR, there's a bank terms here, has a negative relationship with bank risk. In other words, the finding says your capital to asset ratio has nothing to do with your bank risk because why? You're strong. Because why you're being backed by this government support, political support. The other one, that bank's franchise value exhibit a positive relationship with bank risk in non-crisis year and negative relationship during crisis year. That one only when there's a crisis, there's a political crisis, there's a change of government, then happen. Okay, because you said, oh, I'm very strong, I'm because this, but what happens if you don't take risk management seriously? You say, okay, no need, because we have very strong support, our fathers very strong, now our backup. But when there's change of government, what happens? You collapse. Yeah? So there's a positive relationship, but if a change, so that's how only be strong. You be strong. You don't have to be under one side or the other side. The other one, that lobbying decrease bank risk in non-crisis year and increase risk during crisis year. Yes. Yeah. This is normally big banks. Okay, small bank they don't rely on this. They have a very strong this operational risk. Okay, I'm very strong. I can rely on my own. Okay. Okay. Bank capital is at the center of regulatory attention in modern banking regulation because capital is assumed to serve as a financial buffer. Yours is stronger, your capital base, these are shareholding funds, whatever this your profit reserve, to absorb losses and the bank shareholders' capital stay at risk. Okay, thereby reducing the moral hazard of the bank. Yeah, if you're strong, you make profit, your moral hazard is less. Okay, because you're always strong. Okay, but if you are not, your moral hazard is at risk. Okay. Okay, franchise value or charter value is broadly defined as the value of an organization that would be foregone in the event of foreclosure. In other words, here, if you are not strong, let's say company close, okay, that there's no more. The name doesn't apply anymore. Right? The franchise. Two different views regarding the relationship between franchise value and bank risk. Put forward here. Yeah, I'm actually same like this earlier one with this study. The first argues that the relationship is negative because larger banks have greater market power and take less risk to protect their value. You have to be strong to take less, to take greater risk. Yeah, you to take less risk. You're strong. You have to take care of your risk. You don't need to grow anymore. Sometimes, okay. Or the other one, the alternative point of view claims that high franchise value are a result of increased risk taking. In other words, this normally happen to a smaller bank. They're taking to go big with high risk, high returns. Okay, this is a study conducted. So you want to go big into IIUM. What is your mission? To go big, you take risk, or you just stable to just stay. But in any situation, you need to change, as I mentioned earlier, move from one place to one place. If you sustain, you're just always there, you don't change, you tak move, one day you will be you realize that actually you are not relevant anymore because you don't want to change. You don't want to take risks, you don't want to apply new knowledge, so new risk, new ventures. Okay, so this is the study conducted. Thus increasing the bank's risk and the banking industry overall risk. So this is two alternatives. Banks that lobbied receive earlier and more government assistance funds than non-lobbying bank, but the study does not split least lobbying and banking risk. Okay, this result may suggest that lobbying banks with improved bailout chances engage in riskier activities before the crisis due to an increased level of moral hazard compared to banks that do not lobby. In other words, when you have a strong support, you take higher risk. Okay, but if there is a change in the political situation, there's a big loss on that. Okay, so this is what is meant by risk factors, loss type event against factor controllability. However, Dachin and Soriura 2012 find that banks engage in riskier activities after they receive government assistance, supporting the idea of potentially increased risk level during the crisis. In other words, some banks, they receive government assistance, support the idea of increasing risk. So in other words, you get the support, you take bigger risk. You want to grow bigger. You want to venture more product, more services of your business activities. Okay, we have a half an hour. Dependencies between risk factors and events. The volume of transactions, the speed and the level of automation at which modern banks, or in this case, modern organizations like IUM, operate have substantially increased the possibility and potential impact of operational failures. In some cases, you want to bank say, okay, the bigger your volumes, the speed and the level of automation, okay, you have increased the possibility of potential operational failures. Then in view of this, the new, okay, this for banking sector, they introduced this special capital accord. It was introduced in 2003. For other organization like this IUM, I don't think so. There's any asset you are answerable to this audit committee of the government. You are answerable to these stakeholders. You are answerable to maybe your these people who have interest in this organization. So for the banking sector, they put forth capital requirements for international bank to provide a cushion against loss from operational risk. In other words, every operational risk, there's a capital allocation. Okay. In other words, every department, every product, let's say housing loan, every housing loan, there's a risk capital for that. Let's say your housing loan volume, katakanlah 3 billion. Okay, you have allocate certain. You may allocate maybe 2 billion. Okay, to cover for that. So for this IAUM, say example in the surgery department, the loss, potential loss, how much? So there must be a risk allocated at that, not by the whole university. For every department, you allocate your own. Okay, this is what is meant by here. Okay, there is dedicated, not only the organization-wide operational risk. This is what banks have been doing. That's why banks always very strong, because they are not they have cushion here. Okay, but I'm not sure organization like IUM have that. Okay, but if you don't have, it's okay. But you have very much better. Is you work like a bank. Okay? Every department have a capital allocation for the risk, for the operational risk. Okay, attribution of loss. Even excellent risk management decision usually do not reduce risk to zero. Risk cannot be reduced to zero. Okay, failures in large complex engineering system can still occur under good risk management and in spite of flawless informed decision under extreme condition. So as I mentioned earlier, even the bank, the big banks can happen sometime. So failures do happen. Okay, take that as a one of your condition. Okay. However, failures of large system and operations such as the challenge. Okay, this talking about a shuttle disaster in 1986. Is a very supposed to be very highly engineered system. They go to the space, still fail, explode. And also this Fukushima Daiichi reactors, supposed to be one of the best. Still there's a leaking. Or this mobile enron drilling. There's a deep water. This happened. It's supposed to be. There's a decision, a flawed decision. Sometimes you have the system, but flawed decision. Making a high level of the decision. I mean the top management. The top management is not absolved from responsibility here. With disregard of poor or available information and of actual effect of the incentive structures. In other words, always learn new things, new technology, informed decision, new, they call it now this, what do you call it, analytic study, analytical science. Okay, always there. Okay, this is the move forward. Moving forward. Too often, catastrophic failures lead to a tight focus after the facts on assigning blame. We are always good at blaming. Blaming, oh, this happened, bad luck. Okay, sorry, this happened. Sometimes we say, oh, act of God. Oh, ni semua kuasa. Kuasa Allah. Kuasa yang tak dapat mengelak. It's not our fault. Okay, implying that nature forces were involved that are uncontrollable. But we can, as I said, we can minimize it. Some foundation for better risk management. Okay, understanding the cause of the hazards, then its potential effect. Have of God, all this sometimes can be at least partly understood. But characterize risk magnitude and uncertainties, identify what can be done. We can reduce with the cost benefit. Okay, assess the agency and value of information. Okay, always have information. You must have a library of information about what the potential factors here. Learn and from near miss identity accident precursors. What is near miss? Things like almost happen, loss. Learn from that. You must. That's why I said is always report the event and make decision about that. Pass it upward, then the top management make decision, pass it downward. Near miss event that happen, almost happen to a loss, but you can discover it. Example, audit findings, discover attempt fraud. That is a near miss event, or something that let's say attempt cheat by this vendor. Okay, must always report it, because there must be a reason for it. Okay, some foundation for better risk management. Deliberately test and learn. Always test and learn, and establish and maintain culture of safety. You must have a culture of safety. Keselamatan tu. Sentiasa rasa feeling always nak selamat. You always tak selamat, tapi always feeling nak selamat. Put the right people in the right place with the right knowledge, incentive, and resources. Right knowledge. Spend money on the acquiring knowledge, and give good incentive to the people, to that so that people are always motivated. Then clearly define leadership and responsibilities. Here again, it must be defined responsibilities, clearly defined, and who own that responsibilities. It must be cannot be just agak-agak. Must be, because these are attribution. Then sharing knowledge and experience across organization, like what IUM doing now. Sharing knowledge, conducting training on risk management, operational risk management. And I'm sure IUM is on the right platform now, because I think this is that one of the, I understand that actually you take efforts to train the staff, to take the time even under this COVID-19 situation, you go for webinar. The learning process is continuous. Okay, this is very good example, which I think I appreciate it very much, and it is a move forward. In many organizations, operational risk management is one of the most tenuous link in the ability to meet the demands of customers and shareholders. While operational risk management is a subset of enterprise, as I mentioned earlier, enterprise, some people say enterprise risk management, but it's still under operational risk management. Challenges like competing priorities. You have to compete. What is your priorities? Okay, and lack of perceived value affect proper development among the program. Okay, you don't see what is the value, because sometimes it's because it never happened. Okay, if it never happened, you don't see the value. Some common challenges. I'll list here, including perception that organizations do not have sufficient resources to invest in operational risk management. I think this is always need for greater communication, education around the importance of operational risk management and the consequences of operational risk failures. Need for increased awareness and appreciation across boards, and better understanding operational risk management step. Okay, this is need to be improved from time to time. Lack of consistent methodologies. This is another step to ensure, to measure and assess risk in area of concern. You must have what is your area of concerns when it comes to providing an accurate portraits of an organization risk profile. What is your risk profile? Okay, I think IUM have a risk profile right now. If as I said, the appetite. What is your appetite? How much risk you are willing to take? Yeah? Establishing standards, risk terminology that will be used moving forward, which is conducive to successful risk and control risk assessment, as mentioned earlier. RCSAs. I'm not sure you have a specific RCSA. Yeah? This is to be implemented. Yeah? We can always conduct further on this how to identify, how to devise on the RCSA, risk control self-assessment. Then the process is varied and complex due to changes in technology. Technology always change, so complex. The function is oftentimes lumped in with other functions such as companies, compliance, and IT, which does not receive significant attention. Okay, so operational risk management program can be manual, disjointed, and overcomplicated, mostly because operational risk management developed as a reactive. Okay, I am saying this is the reality. Yeah, people only react. Yeah? To respond, to regulate and to comply. Okay, we come to our last session, module 3. This time I'm going to Encik Khai, berapa lama you boleh allocate? Encik Khai?
Macam mana tu, brother?
Berapa lama boleh allocate lagi extra time?
Tapi rehat pukul 1. Lunch hour pukul 1.
Okay, I try to okay lah. That mean I can spend by 12:15. InsyaAllah.
Boleh?
12:15 So kita start pun lambat sikit tadi So try to cover everything. Hopefully insyaAllah. So we can run through your template sikit.
Lagi 30 minit boleh?
Okay. Daripada 25 ke 30 minit insyaAllah.
Okay, boleh?
Thank you insyaAllah.
Alright.
Okay. Okay, try to solve it. I think some of you have seen this. Just to mana yang sleepy itu boleh apalah. Okay, module 3, crisis management. This is consequences to this risk management. We have under these modules, agency notification and mobilization, training to prepare. Okay, the crisis business continuity plan, and we have the time case study, some templates of risk management of IUM. Okay, agency notification and mobilization. Local, state, and federal emergency planners have identified 4 levels of response for emergency entities. You have the mitigation, you have the preparedness, response, and recovery. Mitigate, okay. You come to how to mitigate. You analyze all this. Then what is your level of preparedness? And what is your action response? And what is the recovery? Okay, level 1 indicates routine operations under agency notification and mobilization. Occurring and forecasted events present little, if any, threats. And events are monitored and managed successfully by the appropriate agency, but additional emergency agencies are not required to respond. So this is level 1. Then this is under routine operation. Under level 2, heightened sense of awareness occurring or forecasted event, including a potential or present threat. For example, weather or river wash, flooding, raining, all this. Well, Keno here tak ada. Di sana tak ada volcano. Status changes, multiple wildfires. We have like global now, we see as mentioned earlier, wildfires, certain level, high rise, water level rise, certain area, wildfires, extended search and rescue or law enforcement action. So this is level 2. Level 3 indicates that an actual event has occurred or may be imminent. Okay, for example, river flooding start dah naik sampai ke tahap makin lama makin tinggi. This dah mungkin dah melempah. Disrupt public transportation. Extended search and rescue requires inter-agency support. While land fire requires evacuation and shelter planning or raise homeland security threat levels. Then at this level, our local emergency operation center is open. Okay. Kalau kat organization level, you have this, I think under OSHA, Safe and Safety Hazard, health, is IUM ada OSHA. I'm not well trained about OSHA, but I have some idea about that. Do IUM ada OSHA?
OSHA stand for Office
Occupational Safety and Health.
Ada.
Ada.
For HH unit.
Dia mesti ada.
Ada.
This is your operational risk must work together with them. They should be part of these members. At this level, a local emergency operation center is open, and elected leadership, state governors, and ministers of the country. This is level high already. Let's say like big flood. Example now, we have this pandemic. This is we are in this under. In fact, we are under emergency already. Okay. In fact, we are very much. That's why this operations, leaderships, direction coming from this federal level. Then level 4 invoke a response to the most extreme life-threatening and property damaging event. This is also part of this COVID-19. Example include the river flood, sea storm, surge, tsunami, displaced residents and damaged structure or woodland fires and requires evacuation, sheltering of residents, occurrence of damaging earthquake. At this level, the situation is so dire that it cannot be handled exclusively at the local level. Instead, level 4 crisis requires significant mobilization of emergency resources from multiple levels of government. Okay, this is what our country is facing now. And training to prepare. Okay, as I said earlier, mentioned the IUM is very much in preparedness. Is starting already. Okay, regardless of the profession, the most effective way to prepare for the management of a crisis is training. You cannot run away from training. You cannot have less budget for training. To be most effective, the training should be of the highest possible fidelity. The military force call it training as you fight. In other words, you train as if real. As if is this real? But it's not training to be just taken like, oh, this is training only. No, training must be like real. If you are prepared to train, you are prepared for the catastrophic. Okay, and the coordination should be as realistic as possible. This is like real time. This is important in order to elicit the same level of emotion. Because we want to create emotion here. So that the wariness, the preparedness the mentality of the people involved. Bukan it's like berlaku. You must create. The leadership there must be involved here very much. Dedicated. And response that individual will experience under real-time emergency or crisis condition. Okay. There are certain characteristics that can be associated with any crisis. Firstly, there must be a threat of catastrophic proportion. We are into this now, the COVID-19. At the same time, if your this operational risk just now related to this, when the threat, remember, think of the worst case scenario. And then secondly, there is the element of surprise. Always element of surprise. When you do training, you don't, okay, maybe first or second time you can just say make a timeline. But maybe for the real test on the third time, you have to be surprised without telling anybody. Okay, so there must be element. Okay, the third one, there is a short decision time in which to attempt implementation of the mission. In other words, between decision and implementation is very short time, because in the catastrophic situation, in the emergency situation, there shouldn't be any time of oh wait, we want to conduct meeting, we want to elaborate tomorrow or to next day. It must be short time, which is very important. Sorry. Okay. Okay. Business continuity plan. We on the third, the fourth part of this program. We have this crisis management business BCP. Identifies an organizational exposure to internal and external threats. You have both internal and external threats, and synthesize hard and soft assets to provide effective prevention and recovery for the organization while maintaining competitive advantage and value system. In that word, you must have this planning. When there's a threat, when there's a happen, you still maintain your competitiveness. Okay, in other words, if you are number one, when this happens, you cannot be number two. You still have to be number one. So there must be a plan, BCP. Some people call it BCM, Business Continuity Management. Disrupt can happen, but you must able to continue this the time to come back very fast, and the level of service is as before. Okay, a lot of people are taking this excuse. They say, oh, because sorry, we are interrupted, we cannot move on. Okay, for how long you want to do that? Okay, in the banking environment, we cannot do like that. But in the other situation, I think we must be moving forward, must be able to provide the best level of service, which must not be saying that actually, oh, we take time, we drag our feet to make decision. So this is also called a resiliency planning, BCRP, business continuity and resiliency planning. Business continuity plan is a roadmap for continuing operations under adverse condition. You are not working under normal condition, but you are under adverse condition, but you are continuing the service as before. An event that could impact operation is included such as supply chain. When you do this supply chain interruption, loss of or damage to critical infrastructure, major machinery or computing network, this is bound to happen. Example, you relate it to flood or fire. Then, so operational risk management must be incorporated as part of your BCP. So when you talk about BCP, you must have operational risk. They must be hands in hands. Okay, the members are all of maybe different department, but they must be jointly, so that they speak common language. Okay, these are the life cycle. You have the analysis part, you have the solution design part, the implementation part, the testing and acceptance and maintenance. Testing is part. If you do test, you don't know how this acceptable is it? How acceptable is it? When you test, must be accepted. You don't do things that cannot be accepted. You do something you plan, but nobody can accept it because it's too hard or it's too can be beyond control. So it must do something that is within control and always maintain it. Okay, the analysis part. The first part is consists of impact. There must be impact analysis, threat analysis, and impact scenarios. Okay. Business impact analysis, BIA, they call it, differentiates critical agent and non-critical agent. So you must be able to differentiate that. Okay. Of course, under this situation, as I mentioned, business continue as usual, but there must be what are the urgent one, okay, what are non-urgent one, okay. So you must be able to do that. Okay, threat and risk analysis, TRA. Common threats include what? As mentioned earlier, these are all the things like epidemic, what we are facing now, COVID-19, COVID-19, earthquake, fire, flood, cyber attacks, sabotage, insider or external threat, then hurricane and other major storm, utility outage, terrorism, piracy, war, civil disorder, theft, insider or external threat, vital information or material. Sometimes people just take information, they steal the information of the company. Then random failure or mission, critical system, failures. Okay. Okay, impact scenario. After this, defining threats, impact scenarios form the basis of the business recovery plan. In general, planning for the most wide-reaching impact is preferable. For example, loss of a specific floor in the building. Okay, example, may also be documented. Recovery requirements. After the analysis phase, business and technology recovery requirements proceed the solution phase. Asset inventories allowed for quick allocation and deployment of resources. Okay, you have the impact scenario, recovery requirements. Then the solution design phase. This the most cost-effective. This is the disaster recovery. And the acceptable latency of data that will not be recovered. Sometimes data lost forever. Recovery time objective. This is the acceptable amount of time. The RTO to restore the function. Then the solution phase determine amongst others crisis management demand structures, secondary work site. Okay, you must have a site. Let's say main area, let's say Gambang. Okay. For this, but you must have a backing site, secondary work site. In the event Gambang on fire or flood, you must have another site. to continue business. Okay, and this must be documented also. Must always have an agreement. Let's say you want to rent a hotel. That hotel is always not flooding. So you must always have agreement with the hotel management so that when you need it, the hotel always honor the agreement. So must be renewed. Really, well, even you have to pay or minimum cost for the rental agreement, but you're not staying there. But for staying there, maybe you pay extra. Okay, but for the continuous rent agreement without staying, there's a minimum payment. Okay, so that when things happen, the hotel or example another building owners readily accept it. Okay, this is what this meant. Solution phase. This is your solution. Then implementation. The implementation phase involve policy changes, material acquisition, staffing, and testing. So when you implement changes, there must be a new policy, material acquisition, staffing, and testing. This all under different scenario. And testing and organizational acceptance. The purpose of testing is to achieve organizational acceptance. Organizational, it's not at your department. Okay, it must be accepted wide, higher, so that other department can accept. It's not only you, and make known it that the solution satisfy the recovery requirements. Because we always remember that actually we are not working in silo. Nobody work alone. So always involve another department. Okay, plans may fail to meet expectation due to insufficient or inaccurate recovery requirements. Solution design. Okay, so remember that. Okay, you must have tests, test and accept, test and accept always. Because we cannot say plan risk work today. Next 1 year may be different already. Okay, 3 types can be employed. Tabletop. Okay, you can either do this. Tabletop exercise. You can use medium exercise. You use tools. Or complex exercise. This is more complex. This is but still ways to do it. You must have some testing to do that. And the maintenance part. Biannual or annual maintenance. This is some like bank, they used to have quarterly. Okay, but for organization like this IUM, I would suggest by annual, 6 monthly or annual. You implement it so that everybody is always prepared. So they are broken into 3 predict activities: confirmation, testing, and verification. Your confirmation of the information in the manual rollout to staff for awareness and specific training for critical individual, for all staff and for critical individual. Okay, because all staff must involve because they know what to do. Okay, testing and verification of technical solution established for recovery operation. Then testing and verification for organizational recovery procedures. Technical and organizational. These are 2 different things. Then issues found often during the testing phase must be reintroduced to the analysis phase. If there is issues, reintroduce back. Always when you test or you maintain, there's always new issues. You cannot have a perfect one. It's a continuous, always reintroduce, and make it into part of that your analysis. Analysis is the earlier part, the first part. Okay. Now we come to maintain, but the earlier part, make it as analysis. Sometimes when you brainstorm, the analysis part, you forgot. Nobody can think about this. But when you maintain, this issue come out. So make this an additional factor under your analysis. Okay, you can have this. You cannot come out this without doing testing. All this. this without all this phase of analysis, solution design, implementation, testing, acceptance, and maintenance. If you don't do this, you cannot. This a complete cycle. At least the minimum part. Okay, we are here today. Difficult roads often lead to beautiful destinations. Okay, how true is this? We must be able to accept new things, new ideas. Okay, I have time here to do some looking through at the templates that being shared by Encik Khai earlier. The template was so big, so I'm able just to cut its cake, make it I'm able to print screen it and to share. Okay, I just want to ask Encik Khai, these are all members here aware of these templates?
Sepatutnya template ni dong kena dapatkan daripada Office of Quality.
Office of Quality,
Quality yang sediakan template ni. So anda kata ada sebarang risk di department masing-masing, diorang akan isi lah part-part yang berkenaan.
Very good. So that means that this is they are aware what are the basic risk information all this. It is a thing, but then on this terrain, on this part of this crisis management tu belum ada lagi lah, kan? You punya, have you done it? Belum.
Risk management.
Yes. Okay. It's okay, but can start thinking of the human resource part. Thinking about that. Okay, so we untuk consultancy can able to help lah. If our expertise is needed, inshallah, on the small scale basis first. Okay. Risk. This is a risk and control self-assessment. You develop. This is part of the operational risk program. With risk management team, engaging with business process. Get the business process owners. Because business process owners here must not be excluded. They must always be, because their interest is to make business, but they must be aware that actually there's a operational risk involved. Okay, so they must be members in identifying the risks and controls in the organization. While every organization will approach measuring operational risk differently. I think we have to accept it. Banks different, but at least must be something. There's a body. We can always define it, refine it. While every organization is different. One of the first steps to understand the nature of operational risk in your organization is through, as I mentioned here, risk and control self-assessment. RCSA. Do you have this RCSA done already? Check. Do you have that RCSA? Are you aware of this RCSA?
Untuk HR management punya case ni kita orang dah selesaikan minggu lepas. Dengan unit quality kita orang ada perbincangan.
Ada risk control self-assessment? Ada? RCSA. Yang I mentioned dulu. RCSA. Risk control self-assessment.
Ada.
Buat self, kita buat ada working group. Good, very good. Yes, okay. Right. So here also this can also be used to perform operational risk assessment, analyze your organization's operational risk profile, chart a cost for managing risk, and the risk control assessment form. You must have all this, your checklist here, part of your organization overall operational risk framework. This become part of that, and you have to documentation. Then you have the estimation, the frequency and impact of the risk, the control process, and also general best practice. What is your at the business level? You must have best practice also. This part of this. So here I'm looking at it. You have these 5 categories by colors here. These are all. I think bank also use this. Colors also almost the same. When talk about red, it's already dangerous already. Establish standard risk terminology. This as I mentioned. Then consistent methodologies, measures, and risk assess. This develop completeness. This risk and controls. This always must be complete for analysis. Okay, and then you incorporate. You sudah incorporate this method for identifying non-financial risk. Here, you are not only dealing with financial. What are your non-financial risks here? I think when we cannot say non-financial, everything must have at the end of the day dollar and cents, ringgit and cents. So there must be a loss. Even your reputation is at stake. Also, there's a risk of financial loss, because people sue it, and the budget must be enough for this. I'm not sure how long do you do this. You still have a dedicated risk department, operational risk department. Okay, if I may ask you, Chikai, if I may ask, do UIUM have dedicated operational risk ataupun just loose department?
Dari kalau macam risk tu by each department lah. Kita kena kenal pasti setiap department tu ada risk dia. Kalau macam HR, kita punya risk adalah loss of staff.
I see. But dedicated staff ataupun staff tu buat ada job?
Ada job.
Oh, I see. So this is what I mean just now. You must move forward now. Dedicated staff. Dedicated staff doing the job. So inshallah, I think you'll be on the right safe hand sooner or later. Okay, these are the things that I can share with, and this also when I see this, you have this 50%, almost certain event is expected to occur. Likely, the event is will probably occur in most possible 16 to 30. You are able to quantify this. As I said, anything can be measured, can be done. Now you are able to measure, able to crack the head. That's why we need a dedicated person, because this is okay. It can be at the beginning just by 1 or 2 staff of the department, just on a part-time basis. But sooner or later it could be dedicated full-time for this purpose, so that competitiveness of the organization will be inshallah maintained forever. Okay, another one, this is risk treatment. Any accept, this is the treatment option. Reduce, like any further action, accept any further action, avoid. If the risk, you have also avoid, transfer, reduce, and accept. This is which is standard. This I should say DVC is on the right track. I think nothing to worry so much, but as we move on, just improve the quality. Okay. Do you have, as I mentioned earlier, this library of risk? Do you have the library of risk and controls? You must be able to have that library, risk management process into risk management, documented it, and there must be central system that keep it and being reviewed from time to time. This is what when come to the planning of the operational risk management function here. Okay. Okay. So the color here, merah, reputation here, major. Is catastrophic is black. Okay. Minor red. This green. Significant is blue. Okay. Okay, that's fine. Okay. Okay. The benefits of a strong professional risk management. I just wrap up. Establish an effective professional risk management program is helpful in achieving an operational organization the strategic objective while ensuring business continuity in the event of disruption in operation. What are the advantages? You are better informed. Business, you are better informed about risk taking. Improve product performance and better brand recognition. You have a better brand recognition, stronger relationship with customers and stakeholders, and greater investors' confidence. Your investors are happy because their money is ensured returns. Then, of course, from time to time, you have a better performance reporting in terms of your profit and loss, and more sustainable business for the future. Okay, with that, I wrap up my presentation for today. Alhamdulillah, and you can contact me at the following connection. If there is any question, is there any question? If there is any, I can take one or two, or if you have the time, Encik Khai.
Ada sebarang pertanyaan atau persoalan daripada participants kepada Encik Razali berkaitan dengan operational risk management. Ini untuk pengetahuan Encik Razali, kita akan ada internal audit pada 7 dan juga 8.
Bulan 9 besok
Esok dan lusa.
Okay.
So saya rasa untuk topik risk management ni, pihak quality dia telah pun sampaikanlah maklumat berkaitan dengan risk management ni kepada setiap department lah, pada department masing-masing. Okay. So, saya rasa kebanyakan staff pun dah tahu. Maksudnya basic daripada risk management tu at least orang dah tahu lah sedikit berkaitan dengan risk management.
You mean from today's session Okay,
today's session kita just tambah input dan juga adalah information daripada quality management untuk risk management ni.
InsyaAllah. Alhamdulillah. So this audit will be taking up from there. So assessment. Okay. So kalau boleh Cik Khai, saya pun saya tak ada buat print screen. Kalau boleh print screen, Cik Khai ada buat print screen kan?
Print screen untuk apa? Talk hari ni ke?
Talk hari ni ada kan?
Boleh.
Boleh share nanti hantar ke saya sikit, ada for my record. This participant dia semua. Jadi at least saya dah dapat sikit untuk saya punya record.
Jadi saya try share feedback ke?
Yes, okay. feedback. So ada question tak?
Ada seorang persoalan daripada participant.
So semua okey ke?
InsyaAllah rasanya okey ni.
Alhamdulillah. Kalau okey. Okey, many things. So insyaallah alhamdulillah, terima kasih kepada pihak MISTI sekali lagi. Especially pada Sultan Ahmad Shah Medical Center, IUM, kerana menjemput saya memberi ceramah hari ini, dan untuk akan datang insyaAllah Cik Hai sila hubungi untuk apa-apa topik kita boleh discuss untuk di masa akan datang.
Okay.
So itu saja Cik Hai.
Thank you to Brother Razali Ahmad from Kuntum Consultation and Training Service for the talk, and hopefully all of us can get benefit from this talk. And with that, we end our talk today with Tasbih Kafarah and Surah Al-As. Subhanallah.
Bismillahirrahmanirrahim.
Cik Razali nak ni ke? Print screen
Ni boleh hantar ke apalah saya punya WhatsApp apa, dan lepas tu kalau boleh hantar link yang apa tu kan, YouTube tu. So this satu lagi, normally dia ada this training appraisal kan. So yang training appraisal tu tak ada buat, pihak kaya dia buat lagi.
Macam mana?
Training appraisal tu yang tak ada buat ya, soalan apa ni, feedback daripada training ni.
Feedback form ada.
Boleh ke share kat saya?
Boleh.
Untuk saya punya information. Jadi kita untuk improvement akan datang insyaAllah.
Okay, thank you brother.
Yeah, thank you sesama.
Assalamualaikum.
Waalaikumsalam warahmatullahi wabarakatuh. Stay safe. Okay.